Everyone, it's me, NYSE Einstein from the floor of the New York Stock Exchange, the Einstein of Wall Street, November 5th. We are coming into the first week. We're seeing a sizable spike in volume. We're seeing sort of a flat lining with a positive posture in the marketplace. Russell up 2 little ones, spiders down 3 little ones. The Dow closing at a record, up 30 points. At this point, any day we're green, we are breaking new ground in the Dow. The Dow caught up with where the S&P had been for a while due to a lot of stock-specific sell-offs that we saw with some of the bigger names like the FTX and the Boeing and whatnot, which dragged on the Dow over the last month. It's caught up. We're at record highs here, closing at a record high today at 27,492, up 30 points. But basically, with 1 billion shares trading, that's a big deal. So what's important to look at in this world and the market right now? So we definitely saw a lot of the flight to safety names, like we saw some of the energies and the gold and the yield get sort of eviscerated today as people are getting out. So with a large volume, so the market's flatlining, super high volume coming into November. We had September and October were kind of light on the volume side as people were watching the market eke its way to higher levels with some definite fear on what October could bring. October brought a lot of green, that is supreme, and that's where we're at. But now, November, people are posturing themselves into the end of the year. Some guys are closing out their accounts if they have made any money. The S&P is up 18% for the year. What we're seeing is money shifting hands. That is really a function of why we're seeing this huge volume. It's people getting out of one huge sector into the other, rotating stocks and cyclicals and sectors and whatnot. It's hard to know. They're getting into the banks, they're getting into the consumer staples, they're getting out of the REITs, and they're getting out of the gold. That's what today will bring. Basically, the market felt a little on the weak side over the day, flatlining in that respect, but the market supported whatever sell side did come in. 1 billion shares trading, S&P off a little bit. Gold down 27 points. So there was a flight to safety when people sort of taking on some risk on what was really taking on some risk on markets sort of peaking out. Now that trade is coming off. They're selling bonds, yields tanking. Oil up a little bit. It's an odd mix. A lot of it's like a 50-50 mix, red and green on the screen. That's all I have to say about that. Earnings season, once again, talking about stocks that are not, the market is not forgiving on those that miss. Shake Shack getting eviscerated. Uber getting eviscerated. Trading it, it's IPO low. Way below its IPO low, $28. Shake Shack down $16, $17, $18. That was a growth story. For the last bunch of years, I'm sure you had it in Germany as well as here. Every other day we were seeing a Shake Shack open up on your corner. It was a growth story, people were loving it and all that. But at some point that game has to end. Competition, lack of growth, lack of forward guidance going into a bigger expansion story. Stock had gone up from the 35s to the 45s all the way into the 70s. That game is over now. This market is not particularly forgiving. So they're buying them up. Market's trading at highs. Stocks that really, it's buy the rumor, sell the news. When the guidance is forward and the earnings are in line, even those stocks are getting hit on this one. So it is clearly time to take a profit in some of these earnings names. As far as the market goes, I'm not clear. I'm kind of getting an inkling that we could be getting toppy here, but there's another side of me that think it's a breakout. So I'm going to watch the next couple of days and see what that will bring. All that being said, let's not overdo it. I love my job. I love my life. I love what I do for a living. This is my office. This is the floor of the NYSE. Inside First Off, Einstein and Wall Street. I love you all. See you tomorrow.